Hello. Hello everybody.
Hello.
Today's class is going to be taught by Ethan. Now, Ethan's only in grade 4, but he's super intelligent and very talented, and he's very good in programming. And he also in grade 4 he also went to the grade 8 math contest and very nearly got a certificate for that. So that's very impressive indeed for him. And he's the master of stock trading here, and as you know, this class is about stock trading, and so we're gonna learn stock trading because it's like one of the big parts in the world, so it's very popular, and many people don't know how to manage their finance. Either they screw up and lose a lot of money, or they spend a lot of money to hire somebody to manage it for them. And we're going to learn how to do that. And once you learn how to do stock trading properly, and once you're good at it, you can make AI models to do it for you. So it'll be like large scale and much more efficient. And if it's a good model, then you will make a profit very quickly. And if it's a bad model, then you're gonna end up losing a lot of money very quickly. But that being said, Ethan, you ready?
Yeah, so hello everyone. Thank you for coming to my stocks class. You'll learn lots of stuff about stocks these classes. So first of all, what even are stocks? First of all, can you all see my screen?
Yeah, we can see it.
Yep. Okay, so what are stocks? Stocks are shares or parts of a company. Having stocks can make you money, but of course at some risk. Companies' shares are a whole lot cheaper than buying the entire company. You must buy the whole company or make a deal with the company to buy some part of the company, unless if they have stocks. Like, you don't have to make a deal if they're public on the market. If they have a stock, then you don't have to ask them if you can buy some stock from them or a part of the company. And stocks help businesses make money, but they also help make the shareholders money, which are the stock owners. It's worth of it. And then you got the dividend. How much money would it be on the quarterly dividend payment?
$2?
What? $10?
$2.
$2. Yeah. So if you divide 4%, which is the annually dividend, you divide it by 4, it's the quarterly dividend. And then you get 1% of 200, that's 2. So let's just see the Apple dividend. So the dividend is over here. It's 88 cents per share. They say it. This is the dividend yield. And this is annually. Everything's annually, so you have to divide it by 4 to get the quarterly one. And then down here's the ex-dividend date. It shows when it had the dividend or when it has the dividend. But another way to go to the market, the volume is lower than the market and it will move less than the market. But if the beta is negative, which is a lot less, the stock will move opposite to the market. So let's take a few examples. So let's just go back to the Apple example. So we see the beta is 1.2. So if it moves up, the market moves up 1%. On average, what should it move up by? Apple. So because it's 1.2, so it's if it moves up 1%, then it should move on average up 1.2%. But it doesn't mean that it'll move exactly that much, just on average. Everything is on average. So let's go to another example of maybe Zoom. So Zoom has a beta of negative 1.45. So that means if the market moves up 1%, it on average moves down 1.45%. And the beta is right here. So things like, is it?
I can't edit the limit, stop price, the order term, and the date.
Oh, because those are, yeah, because it's set for market. So, but if you change it to limit, you can do it, because market, you don't need any of this.
Okay.
And then limit orders, these are for different type of orders, but limit order is the price, and then this is the good till. But I just recommend good till day. And then I'll just go back to the Air Canada thing, and then I said I wanted to buy 300 shares. So yeah, in limit orders, you're sort of betting that it'll go down a bit, so then you can buy it, or you just want to buy. Other questions?
I have a question. How to find the price in the history? If it is you find a ticker, yeah, show them.
So yeah, I like CNBC because then you could just like check any range, like the 1-day chart, the 5-day chart. There aren't like any like you can just say like 25 days, but this has a pretty good range. And then there's month, 3 months, 6 months. The YTD is year to date, which means it's from January 1st or from the first trading day after January 1st. And then there's
wait, Ethan, the market market is open from 9 to 4, right?
9:30 to 4.
Oh, okay.
And then there's 1 year, 5 year, and then there's all time. And then all time is pretty short because it hasn't existed long for Zoom. The Chinese education stock's a nonprofit, which means that they'll charge less. They'll only charge as much as it takes to run the company. So that's basically a nonprofit company. And that's why it took a huge hit, all the education stocks. And they literally like went down in a right angle right when the news came out. So too bad it doesn't show it anymore, but you might be able to see the line over here. It's like when you buy 5 shares, sell 5 shares, you're not shorting it because you sell shares that you have. And then you cover your shorts, which is basically buying. So you're going opposite. And then you always want the stock to go down. And then you'll make a profit if it goes down. But shorting is very risky. That is why many people stay away from shorting stocks.